Hey crypto fans, my name is Garrett and welcome to Altcoin Radar. Today guys, I'm going to do my best to explain crypto to all the beginners out there, alright? So guys, if you're brand new to my channel and you think you might enjoy the content that I create, then go ahead and make sure to subscribe to my channel. And guys, go ahead and give this video a thumbs up because it helps me out and whatnot, right? And also guys, feel free to follow me here on Twitter as well if you want to. You can find the link to it in the description below this video. I like to talk about altcoins, NFTs, day trading strategies, and all kinds of good crypto stuff on a daily basis. So if you guys are into that sort of thing, you might as well go ahead and give me a follow because, hey guys, I'm here for the long term and I'm not going anywhere. So you might as well. All right, guys, so this video, let me before I get started, I just want to say this real quick, all right? This video is going to be jam-packed with information, okay? I am one of those types of people where I like to explain things to people in the easiest possible way whatsoever, all right? I want people to be able to understand things, you know, in a very, very simplistic manner, okay? Not everything has to be as technical as it seems, okay? So realistically here, I'm gonna try to explain this from a complete beginner's perspective so that you guys can understand, okay? Because I know what it was like when I was a beginner trying to learn this stuff back in the day, and it sucked, it really did. So I'm gonna do my best here, and you know, we'll see what happens. So guys, we are going to learn about cryptocurrencies today. Well, actually, you guys are, all right? So guys, the very first question that you probably have right now is, what the heck are cryptocurrencies, right? I mean, what are they, right? You've probably heard about them and you have no idea what they are. So guys, without me getting, you know, too technical, again, I'm going to do my best here to explain. So guys, here's what we're going to do, all right? First, what you want to do is think of cryptocurrencies like regular fiat currencies, okay, guys? Like think of the US dollar or the Canadian dollar or something like that, or your British, you know, your British pound sterling, or, you know, whatever, all the other currencies out there, okay? You know, except they're entirely digital, okay? Think about that for a minute, all right? Now, guys, each individual cryptocurrency is realistically just a collection of numbers and letters. And guys, although it might sound kind of complicated, it's actually really not too much different from what we see with regular fiat currencies today, in all honesty. And what I mean by this, you guys, is, you know, pretty much almost every single piece of fiat, currency bill, you know, like your typical regular dollar bill, they've got a unique serial number to it, okay? As we look at here in this picture that I have here, you know, every single U.S. bill or every bill that, you know, I don't know how it is in other countries, but for the U.S. dollar, every U.S. dollar has got a serial number on it, okay? And these serial numbers, they relate to information, you know, such as when the bill was printed, and in theory, you guys, you know, a record of all these bills that have ever been printed, you know, where they're at is all kept at a central bank, okay, guys? And this central bank, they share it with, you know, they share this information with other smaller banks and the government as well. And guys, the same is true for credit and debit cards as well, honestly. So with credit and debit cards, you know, you've got your credit, you've got your account number that's sitting on the card itself, and guys, you've also got a password or a PIN code, pretty much, you know, to access that specific account as well. So think about that for a minute, all right? So in addition, you guys, your bank branch, you know, whatever bank you use, whatever, your specific bank branch, they know your account number and your name, you know, simply because you had to provide your personal information just to open the account as well. And this information is also shared with the central bank and the government as well. So guys, I'm going to do a little example for you here real quick, all right? So let's say, just for an example here, you've got a $10 bill, okay? We're going to talk about a United States $10 bill, okay? Let's say you've got a regular $10 bill, and the serial number on it is XYZ, okay? And your bank account number is 111, all right? Now guys, when you deposit that bill into your bank account, your bank branch and the central bank and the government, they will all see and confirm that the $10 bill of XYZ has been moved into account 111. Okay, guys? That's when you deposit. Okay, so pretty much when you do that, when you make that sort of action, those three entities, they all know what's going on with that specific bill in that specific account. Okay, guys? So as you can see from this example, you know, there are digital checkpoints along the way for pretty much each and every individual bill whenever they interact with the banks. Overall, you guys, this is almost exactly how cryptocurrencies work, honestly. Each individual cryptocurrency is like the serial number that you see on a physical bill, okay? So when you see this serial number, okay, you're going to think of each serial number as, pretty much a serial number is pretty much one different type of cryptocurrency, okay? Now, without me getting, too deep into this real quick, let me just show you real quick. Right now, where it stands right now at the time of me filming this video, there are over 19,000 different cryptocurrencies, okay? 19,000 different types of cryptocurrencies, all right? So each one of those cryptocurrencies is technically, I guess you could say it relates to a serial number, okay, on the dollar bill. All right. So guys, it's just simply a digitized version of it, and it's not physical, okay? And almost every cryptocurrency can also be divided into smaller pieces as well, kind of like, how dollars and cents work, okay? An example of this would be, I've got an example here actually that I'm going to show you in a minute. So here we've got an example of this would be if you take one whole Bitcoin and you divide it into 1 million pieces, you guys, as you can see, you get what are called Satoshis, okay? And Satoshis are pretty much like cents in relation to the dollar. So instead of, if you've got a fraction of Bitcoin, instead of calling it a cent, you're calling it a Satoshi, okay? So basically, as you can see here on the chart, we've got one Satoshi equals, a very small fraction of Bitcoin. It takes 100 million Satoshis to reach one full Bitcoin, okay? So just putting that into perspective for you real quick. Now, guys, when we talk about cryptocurrency wallets, I hate to dive in, really fast like this, but, I'm sure you already know what a cryptocurrency wallet probably is. It's a place where you store your cryptocurrency, obviously. But when we're talking about cryptocurrency wallets, you guys, each wallet has its own specific address attached to it, okay? And guys, that address is like a bank account, okay? So here we are on it's just a simple blockchain explorer. This is what an address looks like, okay? So this is somebody else's cryptocurrency address. This is somebody else's Ethereum address, okay? And basically this address is somebody's bank account, okay? Somebody's bank account for this specific cryptocurrency, okay? Except, it's digital and it's not a physical card or something like that, or a physical bank account or anything like that. It's literally just an account number, and that's really it, guys. And because it's not required, you're not required to provide any personal information for it or to create a cryptocurrency wallet or anything like that at all, whatsoever, which is, it ultimately means that your identity is not attached to your crypto wallet like a traditional, bank account is. So that's kind of cool. That's what's cool about, these cryptocurrency wallet addresses is, it acts as your bank account. You don't have to provide any information for it or anything like that. And it's pretty nice. But most importantly, though, you guys, any crypto that's held in this personal wallet or in your personal wallet that's connected to your specific address, it's held directly by you as a person, okay? It's held directly by you, okay? It is not custodied by a bank, like how regular money is or anything like that. So guys, this ultimately means that nobody can shut down your cryptocurrency wallet, or they can't block your transactions, because you and only you have complete control over that specific account at all times, you guys. However, guys, the biggest downside here is that if you lose access to your account or your cryptocurrency wallet, or if you forget to write down your recovery seed phrase for your specific wallet in the beginning, that you get in the beginning, you'll literally lose your crypto forever. So it's extremely important to be able to keep track of all of this stuff that, comes with, when you sign up for crypto or when you sign up for an account on a crypto exchange and stuff like that, or, you get a wallet or something like that and it tells you your secret passphrase. You have to make sure that you keep those passphrases because it's very important to keep them. Again, guys, if you lose them, you are going to lose your crypto forever, and that's not good. Nobody wants that to happen to them. So now, guys, instead of banks and government keeping track of everyone's transactions and bank account balances, crypto transaction records are stored across, pretty much all the different computers that are connected to a given cryptocurrency network. Okay, guys, and all of these transactions and account balances they're public, and they can also be viewed by anyone using something called a blockchain explorer. And guys, here's what I'm talking about. We are literally on Ethereum's blockchain explorer right now. We are literally looking at somebody else's transaction history. I literally just clicked on one. This is literally what the Blockchain Explorer looks like. I literally just, looked at some latest transactions, and you click on from and to. They clearly sent, this amount to this wallet, and we can clearly see here the history of all the different transactions from these specific addresses. So this is typically, just a basic view, a basic understanding of what, what these blockchain explorers actually are. But pretty much all of the balances and all of the records and transactions and stuff, they're all stored in what's in these blockchain explorers. And it's all public. Now, guys, here's where it might get a little confusing for you, okay, guys? These connected computers that I was talking about a little bit ago, the connected computers, they actually earn cryptocurrency for processing transactions on the specified crypto network, which incentivizes more computers to join the network, to process transactions and also earn crypto as well. Overall, you guys, this is pretty much what makes cryptocurrency networks secure, pretty much because there is no single point of failure. And this, guys, in turn, it's pretty much considered decentralization from there on, which is the complete opposite of the traditional modern centralized systems of governments and banks. So that's great. Everybody loves decentralization. I really love decentralization. I really hope decentralization is something that really takes off in the future, and we can really take advantage of it, because honestly, guys, people want their privacy, and decentralization is the way to make it happen. Now, guys, in case you didn't put the two together in the past, from what I was talking about a little bit ago, in case you didn't put the two together, this ultimately means that the digital currencies that banks around the world are currently trying to create on their own, they're not really actual cryptocurrencies, okay, guys? They're literally basically just trying to create an anti-utopian payment network in a sense. In other words, guys, they're being sneaky, and they're simply just trying to find ways to alter the system to pretty much screw over the little guy and continue rewarding rich people. That's just the gist of it. It sucks. So if you ever hear of like a financial company or something like that, and they say that they're, or a government entity, and they say they're creating their own cryptocurrency, don't think positive of it, you guys. Don't think positive of it whatsoever. Okay, guys? Because it is not for the people. Trust me, it is not for the people. It's for them only, and for them to benefit only. However, guys, now that you do know more about what crypto actually is and how it works as a payment system, I'm sure you've got questions on some of the bigger cryptos that everyone has heard about, such as, Bitcoin and Dogecoin and Ethereum and, others out there as well. So, guys, here's what I have to say about that, all right? So you've probably heard of, obviously, like, obviously you've heard of, Bitcoin and stuff like that. And you've probably heard of Dogecoin as well. And there's actually, thousands of various cryptocurrencies. As I showed you earlier, you guys, there's literally over 19,000 different cryptocurrencies, as you can see right here. Okay, guys? And so that's the thing. Just like there are hundreds of different regular fiat currencies. So, we've got hundreds of different fiat currencies. We've got hundreds of different cryptocurrencies, thousands of them actually. But anyway, guys, we've got US dollars, we've got the euros, we've got the British pound, we've got the Mexican pesos, and, so on, whatever. And the crazy thing here is, you guys, every cryptocurrency is different, and not all of them are built to act as a currency that you would use for transactional purposes, pretty much. So, guys, realistically here, overall, there's really two types of cryptocurrencies. We've pretty much got coins and we've got tokens, okay, guys? Now, this is where it might get a little confusing for you, but I'm going to explain this, in as much detail as I possibly can here. All right. So basically, you guys, to differentiate the two, okay, guys, coins belong to crypto networks that were built from the ground up, pretty much. And what I mean by that is someone somewhere in the world basically spent a ton of time and money constructing the code that makes up that specific crypto network. Okay, guys? We're talking about Bitcoin. We're talking about Cardano. We're talking about Solana. Okay? And, that just names a tiny few. But that's kind of what I'm talking about. In addition, guys, coins are, the cryptocurrencies that are, that are earned by computers when they process transactions for a specific crypto network as well. Kind of like what I was talking about earlier. As an example, you guys, Bitcoin is considered a coin simply because the Bitcoin network was built from scratch, and Bitcoin's BTC coin is, it's given the BTC coin it's given to computers, or it's rewarded to computers that process transactions for the Bitcoin network. In the form of fees, pretty much. Now, guys, because crypto networks are extremely hard to build from scratch, only a handful of these cryptocurrencies are actually considered coins, okay, guys? And the rest are pretty much considered technically tokens, in all honesty. I'll be completely honest there. However, guys, in relation to crypto coins, crypto tokens are actually super easy to make, and you can literally create them in a matter of minutes with little to no effort whatsoever, which is without regulation, it's kind of sad. That's kind of why we have over 19,000 of them. Most of them are crap, and they're just complete junk. I'm going to be completely honest with you. But it's the reason why there's over 19,000 different cryptocurrencies right now as I'm speaking. And guys, the same is true with NFTs as well. I'm sure you've heard of NFTs also. Everybody's heard about NFTs, and NFTs are technically NFTs are just cryptocurrency tokens that are basically like digital certificates of ownership for physical or digital art pieces. And guys, NFTs are just another example of what can be done with tokens that we talked about earlier. So realistically, guys, NFTs, they're pretty much just digital art pieces that are pretty much tokens. Another example would be stable coins, okay, guys? So, guys, out there is a company called Circle, actually. This is Circle. There's a company called Circle that issues a token that's called USDC, okay? And here we've got that USDC coin. We can see it right here, USD coin, or USDC. It's actually number 5 on CoinMarketCap right now, or rated number 5, and it's up there quite a bit. So it's a very popular coin. It's a very popular stable coin, definitely the number 2 stable coin right now. But guys, they issue a token called USDC, and guys, this USDC coin is fully backed by real US dollars, which ultimately means that for every USDC token in circulation, this company of Circle, they have $1 US in the bank, okay, guys? So you're basically just giving them your fiat dollars or your regular dollars, and they're giving you back USDC tokens, and that's pretty much how it works, okay, guys? Now, guys, there's another company out there, okay, that's called Paxos, okay? And they issue a token called PaxG, okay, guys? And each PaxG token is actually backed by, each PaxG token is actually backed by 1 troy ounce of actual gold that's kept in a vault in London. And guys, it can be redeemed for physical gold or US dollars, so that's awesome to see. It's really cool that they have an actual stable coin that's, backed by real gold. This is pretty cool. I really like this. Now, the best part about the two is that both Circle and Paxos, they're fully regulated and in the United States, and they are both regularly audited to make sure that they have, the correct numbers of reserves on hand that, that are backing their tokens. Because, they got to be able to back their tokens at all times. Otherwise, they're not going to have enough to be able to, fill certain orders and stuff like that. And we don't want that kind of stuff to happen. So that is kind of why they've got to be audited on a regular basis and stuff like that from a very, basic standpoint. Now, guys, those are some pretty solid security measures right there, if you ask me, to be honest with you. When somebody's getting audited on a regular basis, the security there is pretty good. Now, guys, speaking of security, we're gonna take a step further here real quick. Speaking of security, the most important thing to remember about crypto tokens is that a lot of them are nothing more than just scams. Like I was saying, guys, out of these 19,000 cryptocurrencies, a lot of them are just scams, okay? I'm being completely honest here with you. They really are, and it's going to be a very unpopular opinion. You're going to hear a different opinion from all kinds of different people, okay? You're going to have different people telling you, obviously scammers are people who are, their IQ is just kind of out the door. They're going to try and tell you that a lot of these coins are, oh my gosh, they're all the big thing and they're all the big rage and you need to get into them and you need to buy them. Don't be listening to any of that kind of crap, okay? Just take it easy. Stay away from those coins, okay? They're likely scams, guys. And, ultimately, because cryptocurrency tokens are so easy to create and all a scammer needs to do is create a token, set up a flashy website, pay for a few advertisements on social media and maybe a few news outlets also. you know, I mean, these guys will get rich overnight by crypto newbies that are buying their coin. And then those crypto newbies are trying to get newbies like you to buy into the coin as well. And then, you know, the project ends up, you know, the people who own the project end up pulling the rug from underneath, and you end up losing all your money. And, you know, hey, the guy who created that coin in a matter of 5 minutes ended up walking away with a couple, you know, $1 billion. So, you know, you got to stay away from a lot of these coins, honestly. And, you know, in my videos, I do a lot of different videos where I, you know, try to teach people and try to tell people which coins to, you know, try to stay away from the most, you know, the different types of coins to stay away from and stuff like that. So, you know, if you want to learn about some of that stuff, you know, feel free to browse through my videos and you can find some. Now, guys, realistically, you know, this is ultimately why crypto YouTubers such as myself, you know, exist ultimately. People like myself just simply want to help people like you to navigate the crypto market with as much security and as much precaution as possible. You know, like I said earlier in the video, you guys, I was a beginner at one point in time, okay? And it sucked, all right? Everything that I know about cryptocurrency that I learned 5 years ago, you know, everything I know about cryptocurrency, I learned on my own, okay? I didn't learn from a YouTube channel. I didn't learn from anywhere else. I literally learned from taking risks, failing, learning from those risks, and definitely learning from those risks, that's for sure. My journey has been quite interesting. And, you know, learning from those mistakes and moving on from them and ultimately doing, you know, 10 times better. And it's really a great thing, you guys. So guys, by now though, you're probably wondering if cryptocurrencies are even safe though. Especially after hearing what I was just saying, you know, in the past about security and stuff like that. But guys, overall, not all cryptocurrencies are created equal. However, guys, what I can tell you is that, you know, most of the top-rated cryptocurrencies that we see here, most of the top-rated cryptocurrencies that have been around for years are constantly being battle-tested as a result of always being under attack by scammers and bad actors alike. You know, which means ultimately that, you know, most of these cryptos are extremely secure and their security is tested on a regular basis behind public eyes. Like I was just saying, they're always under attack, so they're always being battle tested. We're talking about, you know, some of the top main big coins, some of the top big projects. I'm talking about, you know, pretty much every single one of these projects that's within the top 100. They're all pretty much secure. I would trust anything with any of these top 100 projects, no problem whatsoever. So that's kind of what I'm talking about here, you guys. Now, guys, if you're still not convinced, though, consider this, all right? As I mentioned earlier, some crypto networks are, you know, actually made up of computers that are spread out all around the world, that are, you know, consistently and constantly double-checking transaction histories and bank account or account balances. And basically, if you wanted to corrupt a network, you know, you would pretty much have to hack, you know, more than half of all of those computers around the world at the exact same time in order for it to happen. And guys, you know, we all know the chances of that happening are realistically slim to none. So, you know, really don't think too much into it, honestly. However, guys, some crypto networks have fewer computers that are processing transactions, and therefore, guys, they're more vulnerable to an attack. And the same rule also applies to centralized crypto services, such as crypto exchanges like you know, like Coinbase and Binance and Kraken and you know, Gate.io and, you know, KuCoin and all those cryptocurrency exchanges and stuff like that. So the same is true with those as well, which is where most of the crypto hacks actually happen, since they're much easier and more lucrative to exploit than an individual crypto wallet, which is insanely secure on its own, which is ultimately why you should keep your crypto, you know, in a personal wallet instead of, you know, having your crypto sit you know, sitting in an exchange 24/7. Realistically, you guys, you know, you really only want your crypto on the actual crypto exchange if you're actively trading or you're cashing out, okay, guys? And when it comes to self-custody, you know, nothing beats a hardware wallet like, you know, the Ledger or Trezor hardware wallets. Okay, guys, you know, those are super popular hardware wallets. You'll have a great time with them, honestly. But I can save that in another video. I'll save those in another video or, you know, whatever. Now, guys, since we are talking about criminal activity in the crypto space, when it comes to criminal activities, it's also true that when hackers make some sort of ransom, it usually includes some sort of form of cryptocurrency. And guys, they usually demand Bitcoin 9 times out of 10, you guys. However, they almost always exchange that Bitcoin for a cryptocurrency that's actually built for the sole purpose of privacy. Okay, guys, like the coin Monero, for instance. Okay, we've actually got Monero right here. So usually 9 times out of 10, when a scammer is trying to scam somebody, they're usually asking for Bitcoin. Usually when they receive that Bitcoin, what they're doing is they're exchanging it directly for a coin like Monero. And the reason why, you guys, is simply because, they do this simply because, Bitcoin and most other cryptocurrencies have publicly viewable transaction histories or transactions and wallet balances, like I mentioned earlier. Which makes Bitcoin easy to trace by authorities, okay, guys? So it makes sense for these criminals to use privacy cryptos such as Monero because it's much harder to hack, okay, guys? Cryptocurrencies like Monero are completely private, and even the US government cannot crack its encryption, which is seriously impressive, to be honest with you, if you really think about it. Overall, though, you guys, the majority of cryptocurrencies are not used for criminal purposes. So, take that with a grain of salt. There's really only a handful of cryptos that are actively used by criminals. Okay, guys? But honestly, guys, the real risk is, when it comes to crypto relates to investing in cryptocurrencies, since they're extremely volatile. Okay, now meaning their prices, can swing up or down by, anywhere from 3 to 10% or more on literally a daily basis, you guys. So realistically, investing too much in crypto can honestly be kind of extremely dangerous, especially when you're pushing your luck, with something called leverage trading. If you've never heard of leverage trading, it pretty much means you are trading with borrowed money, this is why you should only invest with money that you can afford to lose if it comes a time that you actually end up losing it or something like that. However, guys, don't take that as financial advice. I'm not here to give you financial advice. I'm just here to give you education and, a little bit of entertainment. Hey, I'm a funny looking dude. Hey, have fun laughing at me on camera. I know I'm kind of awkward on camera, whatever. So, I just like to have fun here and, give a little education to people here in my spare time. So, guys, but now you're probably wondering, why are cryptocurrencies so darn volatile? Why are we seeing big, giant 3 to 10% price swings on a daily basis? And guys, you're probably also wondering what actually gives these cryptocurrencies an actual value in the first place. And trust me, guys, when I was a complete beginner years ago, I had these exact same questions, okay, guys? But what you should really be thinking about is actually the opposite, okay, guys? Like, you should honestly be thinking about, what gives the money in your actual wallet in your back pocket, what gives that money any kind of wallet or any kind of value, or what kind of, what the money that's sitting in your bank, what gives that money any value, honestly? If you really think about it, to answer these questions, once upon a time, you guys, you got to think about this. Once upon a time, dollars, our regular dollars, they used to be backed by gold. And since then, you guys, all currencies around the world, they've all been losing value. And this is because the only thing that backs dollars, euros, or any other currency is, the trust. It's literally the only thing that backs it is trust that we have in the governments that, issues those currencies. And that trust, has honestly just been doing nothing but going downhill and eroding for, decades. So guys, honestly, in addition, governments, they've been actively printing and manipulating their currencies to benefit themselves and the corporations that fund them, all at the expense of the average person, which really sucks. And in turn, you guys, this has ultimately caused record levels, literally record levels of inflation that incentivizes, spending over saving, which ultimately leads to overconsumption. And, it causes the sort of environmental catastrophes, that they claim to want to stop, just to look good, whatever. Anyway, guys, sorry for the rant there, obviously. But back to the original question, though. Cryptocurrencies are pretty much valuable because, of what they do, honestly. And obviously, this value changes depending on, which cryptocurrencies we're talking about as well. For example, you guys, Bitcoin has a value because its BTC coin has an economic profile similar to gold, honestly. It has a maximum supply and only a small amount of BTC is created on a daily basis. And guys, that amount is cut in half every 4 years, okay, guys? Now, guys, assuming that demand for Bitcoin stays the same over time, this would ultimately lead to, doubling of Bitcoin's price every 4 years, right? However, guys, demand for Bitcoin has increased over time as we realize how weak our regular currencies can be, honestly. And guys, this awareness has been enhanced by the recent pandemic, among other things as well. Basically, you guys, as basic economics, dictate when something has a limited supply pretty much, but the demand for it continues to increase, prices of these coins, they inevitably just rise and rise and rise. In addition, you guys, many investors also see Bitcoin as a safe place to park your capital outside of the current financial system, including me, myself, and I, honestly. Brutally honest with you. It's just, I trust it more than my bank now. I really do. I mean, plus I can earn yields on them and make a little extra cash on the side too. I mean, why not, right? Also, guys, another important thing that I should note here is that many other cryptocurrencies are highly correlated to Bitcoin, okay? This is more of a warning type thing, meaning their prices, they're all reliant right now. This is how it is right now. It might not be like this forever, but right now, literally all other cryptocurrencies, they are all highly correlated to Bitcoin, you guys. And, they're all reliant on what the BTC coin does. And even though that's the case, some cryptos such as Ethereum, they have insane value due to the utility that they provide. And guys, we're actually starting to see, the same thing happen with other cryptos such as, Solana and Luna and Cardano as well. I mean, the utilities that they have and the utility that they offer is just absolutely insane. And because of it, people are starting to use these utilities, and the coins are starting to grow astronomically, you guys. I mean, when we take a look at Luna, for example, we're just going to take a look at this real quick for an example. Look at Luna, for example, you guys. I mean, beginning of 2020, okay, guys, beginning of 2021 up until now, it's just been skyrocketing because Luna's utility is so high and people love Luna so much that it's just continuing to grow and grow and grow more and more out of the middle of nowhere, pretty much. And the same thing, with Solana too. Okay, guys, or look at Solana. Solana's another one, you guys. Solana has just been doing very, very well for themselves. And the reason why is because people, the big reason why people use Solana is because of NFTs, okay? NFTs, a lot of people love buying NFTs on Solana, and NFTs on Solana are very, very cheap in relation to Ethereum. So people are choosing Solana over Ethereum for NFTs. Therefore, it's causing a lot of money to be brought into into Solana, and therefore it's ultimately helping, the price go up. And, because it's got a utility and people are using that utility and, constantly putting money into it. Also, guys, we'll go back here now. The Ethereum network can be used to create these cryptocurrency tokens that we talked about earlier. So remember when we were talking about earlier, the various different tokens that can be created in a matter of literally minutes. So basically, these tokens are created on other crypto networks, okay? Like the Ethereum network, for instance. So you can create tokens on the Ethereum network in literally seconds or minutes, whatever. And anyway, even though you can create, decentralized applications, like regular applications you got on your phone and stuff like that, you can create decentralized apps, you can create games, you can create virtual worlds that can't be censored or shut down. There's all kinds of different things you can do by, that these different tokens can do that are built on top of other, cryptocurrency networks. Basically, you guys, all transactions related to creating and moving tokens and interacting with these applications or, decentralized applications, they require Ether to pay for gas fees, okay? Ether is pretty much, it is the token of, Ethereum, ETH, okay? So basically you're paying ETH, okay? So guys, every time that you interact with these apps and stuff like that, that these tokens are built on, every time you interact with these apps or games or virtual worlds, you have to pay gas fees in, ETH or, Ether. And this basically means that the demand for ETH rises as the Ethereum network gains adoption. So as more and more people are using these decentralized applications that were built on top of Ethereum's network, more and more people are having to use the ETH token, this token right here. More and more people are having to use Ethereum's token to be able to pay for the gas fees, to be able to interact and play the games and use these apps and stuff like that. And because that is happening, you guys, that is ultimately why this Ethereum network keeps continuing to grow and grow and grow and skyrocket, to levels that people have never seen before. And that's why they are growing so much, honestly. It's all got to do with the utility that, that these different projects offer. In fact, you guys, Visa, the payment network Visa, Visa was actually testing payments last year on the Ethereum network using that USDC token that I was talking about earlier. And guys, the European Central Bank, they even issued a bond on the Ethereum blockchain as well. Now, guys, the actual reason why the value of BTC and Ethereum, and every other crypto fluctuates so darn much on a daily basis, it's simply because nobody knows what these technologies are actually worth. And, in the broad scale of things, you guys, to be brutally honest with you. You see, guys, honestly, the prices of stocks and gold, even regular currencies fluctuate every single day for the same reason. But cryptocurrencies, they're much more volatile simply because of what they do is revolutionary. It really is. This is stuff that nobody has ever seen before. It's literally stuff no person has ever seen before. It is literally revolutionary. And what I mean by this, you guys, is, for example, guys, cryptocurrency networks, they make it possible to lend, save, and borrow without an identity, a credit score, or a bank. And guys, they make it possible to do business directly with other people without a middleman taking a cut, which ultimately means service giants like Uber and tech giants like Facebook, they could all eventually become obsolete, brutally honest with you. And that's why all these big companies are extremely scared of crypto and why they don't like crypto, because they know that they are taking a huge risk. And if they don't adapt with it, they're going to be left in the dust and they're going to be an afterthought and nobody's going to think about them anymore. Because honestly, all this stuff can be done for cheaper, better, and faster on the blockchain. It really can. Also, guys, cryptocurrency networks make it possible for communities to pool their funds together and vote on how funds should be spent as well, which, ultimately could actually eventually cut out the need for governments and their crooked politicians as well. So guys, as you can see, there are numerous reasons why governments and banks are definitely scared of crypto and blockchain tech as a whole, but they can't actually stop it, and that's what's great about it. Honestly, you guys, you could honestly say that cryptocurrencies are the equivalent to some powerful alien technology that threatens the dominance of the current world powers pretty much. Now, guys, this might all make you a little worried or something like that and make you think that they can be shut down or something like that. But, that's far from the truth, to be brutally honest with you. That'll never happen simply because, the growth of the crypto industry is already tenfold. It really is. The growth of the crypto industry is literally tenfold already. And guys, the government would be, they would be literally out of their actual mind to go and ban or ignore such a robust form of technology. They really would. They would have to literally be like, if they did something like that, if the United States government did something like that in the near future, oh my gosh, I would be laughing for days at these people in office. You have no idea. I would be laughing at them for days because that would just be the dumbest thing I've ever seen in my life. Like, you do not take, the possibility for further innovation and put it, and flush it down the toilet. No. You take it and you make it better and you grow from it and you build onto it. Anyway, you guys, that's part of my rant. Sorry. Anyway, you guys, crypto as a whole, it's just been growing year after year, and that growth is it's unlikely to stop anytime soon, you guys. I know I'm mumbling a lot, and I'm kind of going on run-on sentences here, but, hey, guys, whatever. I got anxiety. I love to talk fast. Whatever. It is what it is. But you guys love me, so... Anyway, you guys, by now you've probably, more or less, convinced your cohort that, crypto is pretty legit. And that realistically, you guys, that means there's only one question question they probably have left to ask you. And that question is which cryptocurrency should you buy? Okay, guys. So this is the next question. Which cryptos should you buy, right? I mean, come on. What do you buy? Well, guys, before I answer this question, okay, guys, you have to remember this, okay? You have to remember to emphasize that nothing you tell your cohort is financial advice, okay? Otherwise, honestly, you could end up in court, if their investments go south, and even if you're legally covered or something like that, you still could find you still could find yourself eating a punch in the face or two, if your guidance, directs their greed to a financial gutter per se, if that makes sense. Ultimately, you guys, this is ultimately why when people ask me which coins should they buy, I usually respond with the following. Which cryptos you invest in all depends on your timeline and your risk tolerance, okay? Now, in terms of timeline, you guys, the crypto market seems to follow a 4-year cycle, okay? Let me just go ahead and let me show you this real quick, all right? So it seems to follow a 4-year cycle. Here was what we're going to do. I'm going to go out and I'm going to actually make this smaller so we can see what we got going on here. So as we can see here, you guys, the last bull run, the big bull run of late 2017, early 2018, right here, which was literally right here. This was when Bitcoin hit $20,000 for the first time. Well, a little less than 20,000, but it hit around that area, okay? Now, as we can see here, that happened at the end of 2017, basically the beginning of 2018, okay? And here we are at the end of 2020, and it started going up again, okay? Now that's pretty much a 2 years spent of it being in a bear market and going down pretty much. And then it pretty much spent the whole next 2 years in a bull market going up. So realistically, that's what I mean when I say a 4-year cycle, you guys. 2 years spent in a bear market, 2 years spent in a bull market. And then it goes and, the 4-year cycle starts over again. Then it starts going down and you spend 2 years in a bear market and then you go up and, spend 2 years in another bull market to another all-time high. And it seems to been, it's been doing that for the last, it's been doing that ever since, back in ever since 2013 pretty much. And before that even. And guys, we're right now, where we're sitting right now at the time of me filming this video, we're currently just past the bull market phase. Let me just show you guys real quick. As you guys can see right now, we are, this was the bull market right here and here. And honestly, you're going to get a lot of opinions here and there, whatever. There's going to be a lot of people who are going to disagree with me, whatever. Me personally, hey guys, I personally call anytime we are currently lower, anytime that we're currently lower than the current all-time high, to me, we're in a bear market. Okay, that's just how it is. Okay, that's just the way I look at things. Whatever. There's no ifs, ands, or buts about it. Everybody's got their own opinion. That's pretty much how I do things. But anyway, you guys, right now we're just past a bull market phase and just beginning the bear market, which is where prices gradually drop further and further until it hits a final bottom is created, and before gradually rising to another all-time high again. So realistically, you guys, you don't want to buy while it's dropping, okay? You just don't. You'll want to buy after it has already dropped a lot. You want to buy when it drops a lot, so that the next time it goes up, you can literally ride that wave. And then when you ride that wave, so literally, this is what I'm talking about. As you guys can see here, I mark my buys and sells. Literally what you do, you just ride the waves. You buy at the bottom, and you just ride the wave right up and sell at the top. Wait until the bottom again, buy at the bottom again, and ride the wave to the top. And you just continue that process over and over and over, and it's very simple to do. Now, this video isn't about me trading or anything like that. I was just showing you that as an example. But guys, here, I just want to give you a quick fun fact, okay? Buying and holding crypto will literally give you the same amount of profits as if you were to try to, trade the market on a regular basis, which I honestly do not recommend doing unless you know exactly what you're doing and you have a solid strategy in place, you guys. Trading is you will lose your money if you try trading. Trust me, I'm going to tell you that right now. You will lose your money if you try trading. Maybe not on every trade, but you will eventually lose money. It's better to just buy and hold or do long-term trades like this. As we can see here, I bought on this one, I bought on July. I bought roughly around July 20th of 2021. And I literally didn't sell until, the middle of August. That is a very long-term trade, but I still made very large profits within there. So it just goes to show you guys, you don't need to day trade to make good profits. You just don't. Now, guys, when it comes to risk tolerance, as I was mentioning earlier, when it comes to risk tolerance, it might sound a bit funny considering cryptocurrencies are risky investments by default, but really, guys, there's really varying degrees of risk even without, even within the crypto market, honestly. Logically, you guys, the more risk that you're willing to take, the greater reward you stand to gain, obviously. Now, guys, the easiest way to measure risk and reward is to look at, cryptocurrency's market cap, which is, pretty much an extremely important metric to check because the dollar value of cryptocurrencies can be kind of misleading. You see, guys, a cryptocurrency's market cap is calculated by the current value of that coin or token multiplied by the circulating supply. So, as an example, you guys, the reason why, here, hold on, let me go to it. The reason why Dogecoin is ranked so high, it's ranked at number 13. Come on. 4 years ago, this coin was down in the poop, down in the dumper. But the reason why Dogecoin is ranked so high is simply because it has a circulating supply of like 130 some billion tokens. And when you multiply that by Dogecoin's current price, of 13.5 cents, whatever, you get a very large multi-billion-dollar market cap right here. A large multi-billion-dollar market cap. All right, guys. Now, you might think that by looking at this, that Dogecoin presents you with an easy opportunity to get rich quick or something like that based on its past movements to reach its current price where it's at right now. But let me be honest with you guys. Dogecoin to reach a level of like $1 or something like that, to go from 13 cents to $1 or something like that, it would require like an additional $80 billion of money of active investment to be, brought into Dogecoin. And that's likely not going to happen. Where's that going to come from? So just take that with a grain of salt, you guys, to be brutally honest with you. Coins like this that have already done very, very well, it's very highly unlikely that they will eventually do another 100x or anything like that. When they've done it once, it's very unlikely that they'll do it again. Now, guys, as a more extreme example here of what I'm trying to talk about, here, we're going to check out a coin or a token called Yearn Finance or YFI. Okay, so here's my extreme example. All right, guys, Yearn Finance's YFI token is worth, it's technically worth, it's technically worth more than Bitcoin in a way, but its market cap is, its market cap is 20 times, smaller than Dogecoin's, which means it will take a lot less capital. It'll take a lot less capital to push the price of YFI token higher, with the exception of Dogecoin and a couple of others as well. In addition, you guys, most of the cryptos in the top 10 by market cap, most of the coins in the top 10 by market cap right here, they can technically be considered as low risk investments by now. They've been around for years, and they are, actually, I would honestly say the top 20 or top 20 easy, can easily be considered, very, very trustworthy projects that that have very little risk whatsoever. Guys, cryptocurrencies like Bitcoin, Ethereum, Cardano, and a few others, Luna, Solana, Polkadot, Polygon Matic, these projects, they're likely to be around for many, 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 many years, you guys. And they're likely to double, if not triple, in price at some point in the greater future as well. As far as the other 90 coins go in this top 100, though, you guys, these coins could easily see gains of 3 to 5x or something like that. But the further you move down the list, the riskier the investment becomes, honestly, because it also takes a lot less capital to crash the price as well. Personally, though, honestly, you guys, I would personally stay away from cryptos that, crypto that isn't among the top 250 coins by market cap. The reason for this, you guys, is simply because most of the quality projects have already come out of the woodwork and, are going down the further you go down the list, you're pretty much just gambling in a sense, to be honest with you. However, you guys, if you come across cryptocurrencies that, obviously if you come across cryptocurrencies that spark your interest, hey, go ahead. Feel free to learn about them by watching my videos. You can watch, feel free to learn about these crypto projects or any crypto projects you want simply by watching videos about them. You can do it on an awesome YouTube channel called Altcoin Radar. And you can visit the Altcoin Radar education playlist. I have an altcoin education playlist, and you can learn about 350 plus different cryptocurrencies from a complete beginner's perspective on there, you guys. But overall, you guys, I'm done talking. That was a lot to say, and I'm done talking. I got nothing else to say about this, to be honest with you. I feel like I did a very good job at explaining cryptocurrencies from the easiest possible way that I can possibly explain things, you guys. I did my best, and I know that I mumble a lot and talk very fast at some point, at some times, but hey guys, I hope you were able to learn something from this video, and I hope if you guys have any questions or anything like that, feel free to reach out to me on Twitter or something like that. I really don't mind whatsoever. But all right, guys, that's going to do it for this video. So I'm going to go ahead and wrap this one up. But again, guys, before you guys leave, don't forget to follow me on Twitter here. You can find the link to it in the description below this video. And also, guys, if you haven't already, go ahead and take a minute to subscribe to the channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you guys in my future videos or chatting with me here on Twitter.